if for some crazy reason your business stopped making a dime today, or heaven forbid, another crazy, stupid pandemic came along, would you be able to survive? Would you be able to hold out for that amount of time and get back on your feet? So, I want to go over burn rate and your runway. These two things go hand in hand. They're super easy to figure out. And in a minute, I'll screen share with you so you can see visually kind of what I'm talking about. And that'll give you a good idea of how much money you need to basically keep the lights on in your business. I typically tell clients to keep at least 3 months worth of expenses in their bank account. I know that sounds like a lot, but if something were to happen, you would have a little buffer or an unexpected expense. You could make payroll. And a lot of that also is dependent on your business. So if you are a seasonal business, this could be very helpful for you because a lot of businesses operate on a 6-month time frame. So you need enough cash to kind of withhold, because some businesses, the bulk of their income comes in those 6 months, and they may still have to hold on with some staffing through those other 6 months. So you need some cash to be able to withstand that, as well as your rent if you have a building. All right, let me share my screen and we'll get into it real quick. Okay, let's talk burn rate and runway. So these are super easy to figure out. The only thing you really need to think about is how many months do we need to figure out how much cash we need for. So the ultimate goal with trying to figure this out is you're in a couple different scenarios here. One scenario is maybe you're a startup and you got a lot of seed money to begin with, and you need to know how long that's going to last. Or maybe you're a seasonal business and you need to figure out, okay, how much cash do I need to get through the slow season, or maybe no season at all? Maybe you're only a 6 month out of the year revenue generating business, but you still have rent to pay and you still have employees to pay, that kind of thing. Okay, so let's get into it, and then I can kind of go over some nuances with this. So what I would do is just choose your time period. So if we're looking at 3 months or 6 months, choose your time period and go back through your bank account and select a time period of when you were in full operation. So whatever that is. So maybe you're just coming off season and you're heading into slow season. So let's say the last 6 months and get the beginning balance. So let's just make it easy, go January through June. So let's take the beginning cash balance of your bank account in January and then the ending cash balance in June. Okay. And all we're simply going to do is subtract that beginning cash balance. So this is $1 million minus the ending cash balance. This would be June 30th, $325,000. And then we're going to divide that by 6 months to give us a monthly burn rate. So that is basically an overall estimating, hey, this is how much money in general we went through a month. Some months were maybe a little more, some months were a little less. But in general, we needed $112,500 to get us through our monthly expenses. Okay, so that's number one. We've got the burn rate figured out. We need $112,500 per month. Now we go to our runway. All right, so now we're looking into the future, and we know we're going into our slow season, and we've got another 6 months ahead of us. Okay, so we know we've got 6 months to we got to figure out how much cash we need. So we're going to put in 6 months and then the available cash. So I actually should have made this 325,000, but let's say we're now in July. Let me just do it this way. Let me keep it simple. 325, because we know that's what we ended on. Whoops. So based on our burn rate right here, of $112,500 a month, and we got to get through the next 6 months, and we only have $325,000 sitting in our bank account. That means that $325,000 is only going to get us through about 2.8 months. Let's just say 2.5 months. Obviously, with this run rate projection, this requires pre-planning. A runway is more or less used for, let's say you're constantly seeking investor money, or you're you need to always kind of see where you're at. A runway would be something I would run all the time. I wouldn't run it at the end of a season like we are right now. This is just for an example. That's basically it. You got to figure out your burn rate first, just how much you're going through in cash, and then how much you need moving forward. So this is kind of looking behind, so to speak, to get this ratio, this burn rate. And then runway is looking ahead, meaning, okay, we've got to get through whatever many months, 3 months, 6 months, whatever that looks like. And we only have this amount of cash. What are we going to do? I will say, if you're sitting at this right here, it's a little too late, but it'll give you an idea. Maybe you can turn some things around, or maybe you can get some investor money, whatever your situation is. But that is the quick gist of a burn rate and runway scenario. Now, I will say some people might be tempted to figure out, okay, well, let me just pull up my P&L and I'll figure out our average monthly expenses. That's okay to do if you just want a buffer in your bank account. But if you're looking for a true burn rate, I would pull the bank balance, the beginning balance, and the ending balance, because there is cash coming out of your bank account that are not always going to hit the P&L. So you might have loan payoffs. You may have some payroll liabilities. You may have some sales tax liabilities. You might have some investor payments or equity owner's draw, whatever that looks like. Those items are not necessarily you're not going to see those on the profit and loss statement when you pull that. So I would just start with the cash that is sitting in your bank account, whatever time period you want to measure. And then also when you're doing your runway, however much cash you have that day and how much cash you need to project out. All right, hope this helps.